Hey guys, welcome to the channel. Friends, in this video we're going to be learning about a very important concept, which is the power of compounding and how to make your first 100 crores. First 100 crores. Now it's not that difficult. It's kind of a pretty straightforward calculation, and in this video I'm going to be talking about how can you reach there and what is my plan also, to make my first 100 crores, right, through the power of compounding. So in compounding, when it comes to compounding your wealth, or there's a concept called the rule of 72, meaning if you divide the number 72 by the rate of interest on which you're getting your money, you'll get the number of years in which you will practically double your money. So for example, if you divide 72 by 25, you get around 2.88, right? So 72 divided by 25% interest, let's say if you're getting on your money, you get around 2.88, meaning if your money grows at 25% for around 2.8 years, close to 3 years, you will double your money. Okay, so this is a simple concept. Now, if you are an active investor, if you're watching this channel, you're serious about investing, you should be able to compound your money at 25%, because the Indian economy itself is growing at a rate of 14% CAGR every year. And if you do a little bit of stock selection, if you're going with individual stocks, mutual funds in some cases, and if you're able to, even if you're an index investor, if you're able to take positions when the market PE is above 26 and when it is low at around 18, you're able to come out at high and go at low, you're able to make 25, 26, 27% returns easy. So this is a very achievable number. That's what I'm trying to say here, right? And so let's say if you start with a capital of 10 lakh rupees, right, and you're compounding your money every 3 years, then what does the compounding looks like? How many years will it take to reach your 100 crores starting from 10 lakhs capital? And by the way guys, wherever you are, whichever phase of life you are in, saving 10 lakhs is not a big deal. You can easily save 10 lakhs, right? So in 3 years you will be doubling it to 20 lakhs, then to 40 lakhs, then to 80 lakhs, 1.6 cr, 3.2 cr, 6.4, 12.8, 24, 48, and close to 100 cr, right? So how many years does it take? 3, 6, 9, 12, 15, 18, 21, 24, 27, and 30 years. So starting with a capital, so small capital of 10 lakh rupees, you can make it to 100 crores in 30 years, right? So this is a very doable thing which you can silently do it without telling anyone, even if you're starting with a capital of 10 lakhs. So you only have to learn how to compound your wealth at 25%, right, which is very doable in a growing economy like India. So you are all set to win if you play your cards well, right? So I hope this is insightful to you. So don't do any mistakes, like don't look for shiny objects. Just focus on building your skill to compound your money, and in 30 years you can make 100 crores and you will be set for life basically, right? Now what is my advice and what is my game plan to reach here is I'll try to share that. So I would say that until you reach 1 cr, right, and you can, in today's day and age, you can make 1 cr very easily. You try to reach this number of 1 crores by generating money, not by compounding money. You basically work hard to save 1 crores and then you compound. So if you're able to do this, you're able to save this first good 9 to 10 years, right? And you can compound your money to 100 crores in 20 years. Now this is very amazing. Like if you have more time left, then you can enjoy your money, right? So this is the whole point I'm making. So try to first work towards saving 1 cr, and for this I would say until you save 1 cr, do not focus on investing. I mean, you learn on the side, do not focus on investing. Focus on making this 1 cr first, right? So how do you make 1 cr? First, if you're in a job, save heavily. Start saving money, save heavily, and start learning on the side till you make this corpus, and keep your money in Don't go for individual stock picking. Don't spend your time there. Just put your money in index. Keep doing your SIP, till you accumulate this 1 CR. Blindly just keep an index or mutual funds. Do not go for stock picking. Your first task is to raise this capital to 1 CR, right? And when you reach 1 CR, then you start this learning about analyzing the companies and timing the market and all these things to raise your CAGR, which is compounded annual growth rate, to 25%, which is required to compound your money at basically double your money in 3 years. So this is a very simple plan. It's very doable, and in an Indian market right now, it's very possible. So this is what I am doing, and I am somewhere between above this number, right? And that's what my focus was. But one thing which I had done is to accumulate knowledge enough to to help me which can help me to generate this money rather than focusing initially on investing, because otherwise you're basically trading off 10 good years, right? If you just keep investing. So you shrink that time and you generate this initial critical mass. Tony Robbins calls this as initial critical mass, which is 1 to 3 CR, right? Anywhere, which is very doable in today's day and age. Now you can achieve this number by saving money, by doing freelancing on sites like Upwork or Fiverr, along with your job. You can start some business on the side, whatever way, and you can get there easily in 1 to 3 years time if you just focus on making a skill and initially focus on accumulating this mass, right? So focus there, guys. Now I have one alternate approach. If you're very busy and you just have a job and you are like mid manager, mid senior level of a job, you're making anywhere between 20 to 30 lakhs per annum, right? Then there's an alternate approach also, in which you can increase your rate of compounding initially to close to 50%. There's no guarantee, but what I have seen from my personal experience, you get anywhere between 40 to 80% using this approach. I have personally got this in my portfolio, which I'm going to tell you about here. So this approach is called as using the magic formula for selecting stocks. So what I'm gonna basically talk about here is that when Warren Buffett started compounding his wealth, initially he did not go in large cap companies. He went for small cap companies, right? Because here the chances of doubling your money are very fast, but the chances of getting it wrong, getting the companies wrong, are also very high. But you can expect the companies to have huge jumps. Like if a good small cap company can basically compound to 100% in 1 year, while this blue chip companies compounded anywhere between 15 to 25% per year, right? So using this formula, you can initially get high returns as close to 50% on an average CAGR, right? And you use this approach till your portfolio is small, till few crores. You can easily use this. So I have made a detailed video about this on my channel, try to explore this. But basically in magic formula, you take two parameters and you use screener.in to screen. Basically I have made the screen. You can directly use the screen on screener so you use earnings yield and ROCE, return on capital employed, for the last 5 years to screen and get a list of stocks, and you do this every quarter. So let's say you do it for quarter 1, quarter 2, quarter 3, quarter 4, and you'll get try to select each time more than 15 companies, more than or equal to 15 companies, right? And start with small capital. That's fine. You can start with as low as 50,000 rupees, right? And in the first quarter, let's say on January, April, October and December. So you make a list using this criteria, and let me know in the comments below. I'll be happy to make another video on this. If you haven't seen my previous video, using this formula, you just screen this 15 companies and invest 50,000. Then in quarter 2 again invest 50,000. Then quarter 3 again invest 50,000. Quarter 4 invest 50,000. And what you have to do is, once the 1 year is over, you just sell this portfolio and rebuy it. So on an average, you will see that in the first year, depending on the market cycle, it can be a bear run or a bull run or a sideways market, you can get anywhere between any return. Like for example, it can be sometimes low also, 5-10%, sometimes negative also. But when the bull run is there, you'll see massive returns of 150%. I personally gotten 120% in 1 year, right, using this formula. So and when you average out over 5 to 6 years, it comes out to around 50%. And this was given by initially a guy called Joel Greenblatt, who runs a hedge fund in US called Gotham Capital, right? You can check him out. And he has backtested this in US for last 60 years, and it has generated over 50% returns, right? And there's a great book called The Little Book That Beats the Market. Go read that book, guys. It's a life-changing book, I can tell you that. Although this goes against the real fun and joy of analyzing companies and investing, but this is a blind way of compounding initially. And if you can risk like 2 lakh rupees, I mean, you're good for life. I mean, 2 lakhs is nothing for people who are in job these days. If you can just try this with 2 lakh rupees, like 50, I mean, and if you see the power of it in first 2-3 years, I mean, you'll make a lot of money. You'll get a lot of confidence from this. So this is what I would say, do initially if you're willing to compound your money. Try to accumulate the first 1 to 3 CR initially through a job or some business. If you're in a job, you don't have any time left. If you get decent money, initially compound your portfolio well to 1 to 3 CR using magic formula, and then go for a consistent portfolio of around 25 companies where you consistently invest using technical as well as fundamental analysis, on which I'll be creating a lot of future videos upon. So guys, I hope this video was helpful. Thanks again for watching the video. Stay tuned for amazing upcoming videos, and yeah, let me know in the comment section below how do you like this. This is a very simple way to become financially independent and free by compounding your wealth in the stock market. Stock markets are the agents to compound. I mean, it's the best vehicle to compound your money. I mean, you have to just use this machinery and get the reward from other end, right? So yeah, I mean, this is great. It's headache free, and learn this skill well, guys. That's what I would advise you. So thanks again for watching the video. I'll see you again. Till then, take care, bye bye, and I'll see you again soon. Thanks for watching.